All right, guys, happy election day. I just want to do a real quick one if you haven't. I don't think you missed anything actually. We thought vol would collapse. I thought vol would rise as I told you yesterday, but I think the play is back on. Let me show you what's going on. Here's SPY. It's at 50, so it came back up. So I figured uncertainty would go up on a day of the election. So I think you still have time to put your play on because right now you're playing for an IV rank uh, collapse or, reverting back to its mean. So here's your SPY chart right here. Um, I'm sorry, I have it set to what I usually have it on as I used to day trade a lot, but according to this, it's at the bottom, should be on an upward trend in the SPY. But what I really want you to look at the IV rank over here. You know what? Hold on. I'm gonna load just the IV rank only. It's a lot easier to see for you folks, and that's really all you need anyway. All right, so I think I misspoke. These are 6 trading days. I mean, each tick is a trading day. So I think I misspoke yesterday when I counted 6 days back, but um, I think we put on the trade somewhere down here. I can't remember when, December 45 days to expiration. But anyway, it doesn't really matter because here's what happened. IV rank is pretty much close to 50. See, IV rank's a little bit different but within 2%, it doesn't really matter. So if you go back to Dole right here, look, IV ranks at 50. If you go to Thinkorswim, IV ranks roughly 48.08. So you still got it's still hold on, let me try something. Okay, so IV rank is 47. So depending if you're really close percentage wise, um, I'd still go with it. I don't usually I'm not too picky based on, a couple percentage points. So as long as one of them is close to 50, either a dough here or on your charts here, I use it either way. I usually use this study, load study set, blah, blah. This one just because I like to see how high it goes. Give me a second, let that load. All right, so anyway, it broke 50. It's pretty much close to there. IV rank popped again a little bit today, as you can see here, because today's election day. So, it's hard to say what'll happen. I mean, I don't know. No one knows, right? No one has a crystal ball. But the market thinks that if Hillary wins, the stock market should go higher and IV rank should collapse. Now, if Trump wins, I'm guessing the opposite, right? IV rank will climb higher, right? And the stock market will drop back down, as evidenced by just, who knows. But either way, like I said, you want to try to make 1% on, if you can make 1% per trading day on 25% of your capital, that's about 66% per year. And I think I have it here. If you go to my, if you go to my free forum, I think I have it here, under newbies, I think. Begin with the end in mind. Here it is right here. Hold on, let me double check. Yeah. So if you had 21% per day, yeah, 60% per year. So you can do the math, So you do have, I shared this with Tom actually on Teach Trade, so it was kind of funny. I think my math is right, who knows? But I know for a fact you can make a shitload of money because to be frank, it's just been working for me. But hey, do what you want. I'm just here, shooting off my big mouth, so you can take it with a grain of salt. So how you want to play this election day? I'll go back to Doe real quick. And I apologize for my language. I got a real bad potty mouth. I don't know why. But then again, there's no crying in trading. So put on your big boy panties and make money. Doe, spy, strategies, repetition is the mother of all learning. You want to play this election? Depends how risky you want to be. Here's what you can do. If you have an IRA account, if you don't have an IRA account, you can do this. Okay. I'll check on this. This is standard, all right? Give it a second to load. You'll see, look, perfect. Well, 45 days, but that's a weekly expiration. You kind of don't want a weekly expiration, but oh well. I did check that if you want to. I'll uncheck it real quick, just because I want to see something here. Yeah, you'd be selling the same option as we did last week if you did it like I did last week. So I'll zoom in real quick. In 30, if you're new to Dole, and if you're not new, forgive me, but I assume anyone who's listening to this is new. It's just easier for me that way. So in Dole, anywhere, this is your stock, and if it lands anywhere in the green area by the end of the 38 days when this bet expires, you make money. If the stock, which is this green dot, lands anywhere in the red area at the end of 38 days when this bet expires, you lose money. If you want to know what your chances of being right, click on this little icon right here. It'll show you. So what this means is this is a 1 standard deviation line. Here's a 1 standard deviation line. You have about a 74% chance of being right, of it staying in between these two prices, which is if you sell a put, you're betting in the SPY right here, which is at this price right here, will stay above $199 at the end of 38 days. When you sell a call, you're betting it'll stay below $227 at the end of 38 days. Okay? And if you want to know the math, click on this. You have an 84% chance of either one being right. Combined, it's about a 74% chance of making a penny, at least a penny. Okay? Now, well, hold on. You're going to be selling this for $1.68 per contract. Each contract is 100 shares. So you multiply this by 100, you're selling this, you're making a bet with somebody else for 168 bucks. They're going to give you 168 bucks because they're betting you. If you put on this trade, okay, a lot of people, I say the word bet a lot of time because people can understand that better. So it's like you're in Vegas and you're betting someone else, and that person is giving you $168, and he's betting you that at the end of 38 days, the SPY will be either below this or above this. Okay, so do the math. If you have a 74% chance of being right, what are his chances of being right? This is what I mean by playing with the stack in your favor. Now here's the best part. When IV rank collapse, you can even make, well, this is what I mean by you can make money where the stock market goes up, down, or what. If it goes up this much, you still make money. If it goes down this much, you still make money. If it stays the same, you still make money. You make money 3 ways. If you buy the SPY, it's got to go higher than the amount you paid for it for you to make money. If you buy a call, it has to move higher than the amount you paid for the bet, plus volatility has to rise. Now that's kind of hard. So that's why a lot of people will mistakenly think that'll work, and it doesn't for them. All right. Now, if you click on this button right here, it says your risk is undefined, because what happens is if this finishes below this amount, you owe that person 100 shares of stock. If it goes above this amount, opposite, right? So technically it could go to 0 and it could go to infinity. So that's why and you can't do this in an IRA. If you do have an IRA, you want to clear this, you want to do this real quick, do a standard golden gecko, you can do this. Okay, move these out. Well, if you have a small account, leave them 5 strikes wide. See, this number 5 strikes wide means, see, if you sell this for $200, you're buying the one $5 away. Selling this for $227, you're buying the one $5 away. And you can tell by clicking this little button right here, and see that number 5 right there and 5 right there. That tells you it's 5 strikes wide. It's $5 wide from between here and here. If you have a small amount of capital, a smaller account, do it this way. You're going to collect a lot less, but you're also risking a lot less. See that? This is how much you're tying up with your capital. Meaning you're risking $436 to make $64. That's what is 10% of this. See, that's over a 10% return on your risk there, right? Now, if you do have a larger IRA account, okay, and you want to just still preserve capital, move this right here to this 2 standard deviation line right here. Should say around 2%. And let's do one more. I cannot probably. See this 2 standard deviation vertical dotted line right here? Okay, so look, you can collect way more money. You're going to be risking more money, but you can collect more. Still close to 10%. But at least your max loss is not unlimited. Okay, that right there is a standard golden gecko. This is not what I trade. I did start off this way. It worked great. But there's other ways you can do it to prevent black swan events. And be careful now, because you do not close a trade. If this stock finishes in between here and here, you lose. Okay, because this bet loses and so does this bet lose. See, there's no green area here. Okay, so you do not want to let this expire if the stock is between here and here. So you gotta learn how to manage that. All right, so a lot of that was repetition. I'd rather spend time on opportunity because this kind of opportunity doesn't come along very often, especially lately. Hopefully, there's a lot more volatility now. But if I change this to 5 years, okay, and I just go auto zoom, okay, it'll scroll. This green line right here is how often IB rank and the SP 500 hit past 50. I guess it's going really slow for some reason. It's not filling in, so this is kind of weird. But as you can see, this is this year, right? This is last year. It didn't hit 50 like maybe twice, 3 times so far now. There we go. So I guess I need more RAM with this computer, or maybe a lot of people on the internet just bogged down. But anyway, look how much. Basically, you have a 100% win rate. If you only did this, did a golden gecko or one of the, if you're a private client, if you only did my strategy I taught you when IB rank got to 50, you're pretty much 100% winner as long as you didn't get too big, because you have to be careful if it gets to 50 and then a few days later spikes to 100, even though it didn't stay there that long. Okay, you got to make sure you can handle that kind of move. All right, and be able to adjust. But let's look at the biggest drop. What would be the biggest drop? Biggest move probably be right here. I got a few minutes, so let's take a look at right around here. This big drop right here. So as you can see, it pegged at 100 days. Let's count the number of trading days, and this is below a 2 standard deviation move. But the problem is, so it did go, your account balance, well, on this trade did go negative. But the good news is, if you sold a trade here, I'm going to zoom in, okay, real quick. If you sold a trade here, because IB rank hit 50, as you can see, you'd be selling closest to 45 days to expiration. So let's say that's even this one, which is no way because this is 30 days, right? So it'd be probably out that way. But even if you did this one, okay, you lost, your account showed it, your net leg, it showed a decrease, went negative, because what happened? IB rank climbed to 100 in 1 day, and it moved against you, and it moved against you down here again, and IB rank still claimed at 100. So even if you sold the at the money put, you're betting that it'll have to come back to this, and IB rank has to collapse by this red line, which is expiration date. Look what happened. Okay, so not only are you selling a put 1 standard deviation, which is down here somewhere, betting it'll be above, 186 or somewhere around there. Look what happened to IB rank. So as long as you didn't go too big, you'd be all right. You know what I mean? So like I said, you don't really want to trade more than 25% of your account size, not including your margin. So if you have margin, it's better. So let's say you have portfolio margin, you have a $100,000 account. That means you probably have $400,000 to trade. But if you play like you only had 100,000, you have a lot more money to manage your trade. And I go into that later on how you can use that to make sure you don't have any positions go against you. But for today, as far as opportunity-wise goes, here you guys go. If you want to just play for the week, do something like this and crank down your expiration date. See right here to maybe, well, you're not that low. Maybe right here. Okay, and bring your strikes in a little bit. And here's that gray area right here. I mean that brown area. They're saying it, no matter who wins at the end of 8 days, it shouldn't go above here or below here. If you want to make a nice little trade, you can try and do that. Okay, and put on some, let's see if it'll let you, taking a lot of load. There you go. Yeah, you can still collect some good money and do it, but you know what I mean, do a defined risk trade, because if you lose, at least you don't freaking lose a whole lot. Like bring this in, make it maybe, I don't know, 5 strikes wide. See right there, 4.5. Go to 5 strikes wide. See this right here, pull this maybe out like that. Okay, so look, you can still collect 88 bucks per trade. Well, your probably profit is only 58% because you're bringing it in super close. If you want to make it less risky, then you got to pull these apart. Okay, and then bring these out a little wider. Anyway, and